Hey, Alpha fan, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I'm going to go over, of course, that sea of red on the charts, which just is having continuation, as well as just review Ethereum, as we do see Vitalik's, ETHW, right? Just a minus 81%. Not sure what that's about. But let's go ahead and go straight to the charts to find out. We can see the overall macro view of Ethereum, right? Kind of putting in a ginormous, almost fractal of its previous, cycle, basically, including this kind of right shoulder that we have here. And if it does continue to hold the same fractal, well, that doesn't bode too well, right? Because that was basically just a ski slope down to retest its bottoms, which could be anywhere in that 600 to 400 perhaps region. If we just kind of draw a slope here, we can see that perhaps ETH could go lower than a lot of people would like in the long run. If the Fed does continue to be tightening, and if the Fed continues to increase interest rates, and if the global economy enters a global financial crisis due to all of these factors in China, in Russia, in Ukraine, all throughout Europe, all throughout the world, just the whole world is having problems right now. It's not just the United States, guys. It's not just wherever you live. It's really everybody is having very similar problems. And so, what we do see is that there is the potential for greater downside just on the surface of it. Looking more into details, let's go ahead and zoom in to our current area. And what we can see is that it looks like that ETH on the daily here may be pushing towards filling its CME gap over there at 1340 and 1294-ish. Okay, there's a gap over there on the CME charts. Those professional exchanges that trade just during business hours, just during banking hours, basically, whereas the 24/7 exchanges just go all of the time. I color the CME gaps in purple so that you can understand that 90% of those CME gaps do get filled, and as you can see, price action is working its way back to filling the current gap. Guys, we did have that falling wedge on Ethereum, which should have had a measured move to approximately 2000. But of course, everyone was buying the rumor and selling the news of, the ETH 2.0 merge. And so, of course, that did get front run at the prior level very bearishly, putting in a little bit of a head and shoulders type pattern on a slope. So it's not the most valid one, but of course that does suggest a measured move to perhaps the downside of this 12,000, maybe $11,000 area eventually. And while we could see the market front run us on that side as well, basically you can understand that ETH just isn't behaving very well. And, this probably isn't what investors of the merge were expecting to see, especially with that massive drop in ETHW, right? Let's go ahead and just jump to the Bitcoin Ethereum chart to see which one is winning. And as you can see, Bitcoin is winning considerably. Bitcoin is pushing up quite strongly against Ethereum. And so if you see Ethereum dropping and Bitcoin just holding steady, that's because people are taking their money out of Ethereum and they're putting it into Bitcoin. Let's go ahead and look at Bitcoin dominance just to see if this is affecting other altcoins. And yes, you see Bitcoin dominance is skyrocketing. It is just, chewing up all these different EMA levels. And so we do see that probably today all of your altcoins are suffering. And that could be part of what's making all of that red on the charts. is that money is flowing back into Bitcoin after having reached this low of 38 point, basically 38.9% of the market, and now Bitcoin is 41.3% of the market. So basically, Bitcoin is sucking up a lot of those dollars, and so altcoins will be falling faster than Bitcoin, and that includes Ethereum. Looking over at Ethereum's dominance, it looks basically just like the Ethereum chart itself. That should show you just how important Ethereum is. But you do see that kind of head and shoulders, that very toppy pattern being put on the Ethereum dominance chart itself. So whereas pre-merge, Ethereum was 21 point basically 25% of the market, it is now only 18.25. So it has lost, part of its throne there. Although having basically 20% of the market is quite respectable. Going back over to the Ethereum chart itself, let's just go ahead and take a look at what type of divergences we might have being built up. If you want some hopium, we do have this one drive of bullish divergence on the Ethereum chart, and that will be maintained as long as Ethereum can hold basically a red candle above these previous red candles. As you can see, this is a higher low compared to this low, and so that's a divergence with the chart, which is plummeting, right? So that's going to be held as long as as long as Ethereum is going to be above the, I think it would be something like, hmm. Well, to be honest, I'm not sure. I can't exactly target where it is, but you can keep a watch of your MACD. I'll try to figure out if I can generate some type of math for calculating this, but I'm just not seeing it right now. But basically, if you watch your MACD, if this red bar exceeds this red bar to the downside, then that hopium goes away, and basically the bullish divergence goes away. Okay, and so, but on our, RSI, you can see that we are entering the bearish control zone, and we're not going to turn up unless we get over 14 basically 1460, so $1,460. This thing will continue exploring to the downside, and perhaps could start doing something like this later on. So basically the RSI isn't looking that great on the daily. It is just pushing into the bearish control zone. If we do look at our volatility, you can see that volatility has been expanding ever since the emerge, but it's been expanding to the downside, right? Price is going down, but we're expanding on our volatility to the upside. So as volatility increases, this is actually pushing ETH down dramatically, and it looks like there's still about a quarter of this move left to go. Some type of a topping for this, move to go. We can't be 100% certain, but it's not even at 90% yet, so this move isn't over. And we can see that the Stokes is pointed to the downside, so that will imply continuation, to the downside through that volatility on ETH, and so it's just not a good, point to be long on ETH the last the last week basically, and but however, the Stokes is starting to make a bottoming out process, so this won't go on forever, most likely. I mean, we could have a little fake out to the upside, and then we just continue going down a little bit more. But you can see that the ETH has basically put in the move, and this won't be flipped around unless. At least not mid-fall. It won't be flipped around unless ETH suddenly jumped to, $1,550. It's basically 1,300. Let's just say $50, right? 1,330 bucks. And so, jumping to 1,550 would be asking quite a lot of it in its current posture. It is possible. with that bullish drive on the MACD, but you're going to have to hit some type of hard resistance, and I just don't see it on the chart. So basically, we're considering that this is most likely to continue to the downside. However, because there is this little node right here, there's this little wick right here. Let's go ahead and put this on. You can see also that ETH has just come in contact with the CME gap, and so it could bounce off of that CME gap. It's just sometimes CME gaps are used as temporary support, but most likely it's just going to continue to push down through it, and it looks like that's what it's trying to do right now. I don't see any really good support until maybe 1290, right? And then we can start talking about these wicks, and maybe this wick over here, a couple of these wicks over here, and so it's pretty flimsy in general. This thing could continue to go down onto 1200-ish, right? Kind of interacting with this area over here, maybe some of these areas over here, but it could just end up retesting its lows around $1,000 as well. But let's see what happens with the CME gap. Also, we had this falling wedge, and basically sometimes you get a little bit of a bounce if you come back to retest the wedge. Even if you retest it this far, the pattern itself somehow just I've just found that just on case by case basis, there is a little bounce off of the apex of these things. So let's just pay attention to this area. It could start slowing its momentum down as some of those factors curve, and if it can maintain that bullish drive of divergence on the MACD, then there is a little bit of hopium left here. But most of these patterns have 2 hours and 45 minutes to go. So probably when you're watching this video, you will be able to confirm whether those things got locked in. If we jump over to the weekly, we can see just a pretty ugly candle over here. We can see a bearish engulfing candle just totally destroyed this week. But moreover, you see this a squeeze play on the weekly where we had some price action between the 20 and the 9, and it's squeezing to the downside through the 200, which tends to make it a more forceful squeeze, right? Just like when it popped up here, right? It had a nice pop to the next level. This one is actually just it's just dropping to hell because of the squeeze to the downside. And the last time we saw a squeeze to the downside like that was literally right over here. Okay, right over here before this thing just dropped to hell. And prior to that, we saw a squeeze like that. Basically you can say in this area, this is a little bit of an inversion of the EMAs. There will be a little bit more of a pull to the upside on this formation, but you can just see like what happens when you start squeezing, in these type of areas, and then you cross another EMA and you can just plunge, right? Just plunge. And so that's what we're kind of seeing here. This thing may want to continue to the downside, but again, we have 2.5 hours for that. For that bullish divergence on the daily to attempt to slow things down. But on the weekly, it looks pretty bad. Jumping back to the daily, we can see that, of course, we are just underneath that, that 9, that 10 EMA. We're underneath the 20 EMA, we're underneath the 4 EMA. All of these are very bearish. You don't want to be under all of those EMAs. Let's go ahead and go to the 4 hour. On the 4 hour, obviously, we're under that as well, picking up a couple drives of bearish, bullish divergence on the MACD. However, as you can see, it just tore through this one. It could tear through this one as well. And so as these things become invalidated one by one, they just become meaningless. And that's the whole point of conditions and then validations, right? You can't just call something. You have to have conditions, and then they either get confirmed or not, and there's just a statistical probability until it's invalidated, right? Going down to the 1 hour, of course, we are below everything as well. So this thing is basically in free fall right now, and you're basically trying to catch a falling knife if you are playing with the ETH at the moment. Again, guys, like that, those CME gaps, they do act as kind of a form of support. You know, it's not always the case, but usually price action tends to slow in these CME gaps as the market tests the gap. Let's go over to the CME chart, and you can see exactly what I'm talking about. You can see that gap on the chart right here. And the problem is that the CME market isn't open. Let's see, I haven't updated those momentum zones. It doesn't really matter because momentum is to the downside, and we've basically broken all those EMAs. So I've just went over all of that. You can see that gap is right here, but the CME market isn't open yet, and so as Ethereum on the 24/7 exchanges pushes down, it may end up waiting for the CME chart to open and then confirm a filling of that CME gap, or it could be a massive fake out to the market, making you believe it was going to fill in the CME gap and then jump from basically from the top of the CME. However, if we go over to pardon me, that's Bitcoin. If we go over to the Ethereum chart, there we go. If we go over to the Ethereum chart, you do see that it's already sticking its toe into the CME gap. So if I was just to have a hypothesis of the market for the day, I would just hypothesize that Ethereum is making a play to fill in that CME gap, either for a potential run should the news from the Fed be good, then of course they'll want to fill in the CME gap before the 21st in order to not leave any, questions remaining on the chart that it's going to fall back down. And if we just enter a new bull market because the Fed makes some type of a pivot and increases interest rates by 75 points or less, then this thing could just skyrocket. But if the Fed does increase by 100 basis points or more, then you're probably going to see this dump, and maybe we could challenge our lows or even form new lows, depending on how seriously the markets take the news. Guys, let's go ahead and just take a look at stocks really quick. Again, like the markets aren't open, but as you can see, they did close quite bearishly, testing below support, which does suggest the possibility that it's going to play with those lows for a little bit longer or even break the lows. Usually you want to see a nice double bottom, a nice higher low. You want to see some type of indication that there's a little bit of strength there, and this just isn't showing strength. It's showing a little bit of a bounce on a diagonal, but it is playing with that line, and so this is pretty weak. Let's go over to the Nasdaq 100, and you can see basically the same thing. A little bit of a bounce off of this area, and probably if we go to the hourly on some of these charts. Let's go to the QQQ. Yeah, you can see there's a bunch of little gaps, but you see that little bounce actually filled in one gap, so I wouldn't put too much weight on it. We do have a bunch of gaps up here. That one got filled. We do have a gap up here, and so if there was a run, there would be low-hanging fruit on these charts to try to fill them in. On the basically local level, we could get some type of a double top or something and then come back down, or we could make a higher high. Assuming that there is some bullishness in the charts, there are some gaps which need to be filled, which would suggest that markets, with bullish news, might want to drive up to fill some of those gaps. And so that's just how I'm using gaps in order to modify how I think about how markets may move as part of my kind of a short-term theory of the market, which doesn't necessarily have to be the same as my long-term view of the market. Let's go ahead and just take a look at the dollar. As you can see, the dollar did close with this nice kind of bull flag, But we'll see whether or not this can drive lower, and if this kind of BART formation can reclaim this candle to the downside, or if, like over here, it's just going to shoot straight up. Okay, so like it does this stuff from time to time, works its way down, and then suddenly, it makes one of these type of formations, these kind of bull flags, and then it just continues to go. But the thing about this one is just that there is this very exposed candle right here, which the market may want to retest this candle, and so that could provide some type of a bounce. But that's just hopium, guys. So I wouldn't put too much stock in it. The dollar is traded a little bit differently right now than many other assets, primarily because it's driven by policy these days. It's not really being driven by traders per se. It's being driven primarily by policies, and so the Fed's decision will make a huge influence on that one. Okay, guys, I think I covered ETH in enough detail, gave you a couple of the risk factors out there. Markets will be opening up. Pardon me. We will be getting a lot of these confirmations. For example, the daily and the weekly in about 2.5 hours. Let's see if there's anything else that I failed to mention. I think we covered pretty much the basics. So that's your alpha for the day. Stay safe and happy trading.